Welcome to Global Money Talk, brought to you by SamProTV. Greetings to all of our viewers from the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm your host, Remy Blair. Joining me here at the New York Stock Exchange this morning is Tai Wong, independent proprietary trader. Good morning, Tai. Great to have you here.
Good to be here. Fed Day.
Fed Day, yeah, absolutely. And this morning, for our market insight, we are joined by JD Durkin, CBS contributor and host of Public.com. Good morning, JD. Thanks for joining us.
Good morning, Remy and Tai. Great to be with both of you. And you said it, the Fed Day of all Fed days is finally here. I'm very excited to be with you today.
Well, you are joining us from sunny California today, wrapping up your time at the Future Proof Wealth Management Conference in Huntington Beach. So tell us about your attendance at this conference this year.
Yeah, well, this is the second year that I've been here. It is one of the world's largest, as you said, Remy, wealth management conferences, but it's truly unlike any other wealth management conference. It's not exactly in the stuffy old convention hall. It is on the beach in beautiful Huntington Beach, Orange County, California. There's live music, there's panels to attend. It's as much fun as it sounds, and it very much is. Let me be clear, third eye blind, quite literally, played a concert here on the beach last night for Future Proof. As much fun as it is, I'm also struck by how boring so much of it is, and I mean that respectfully, because boring, I would argue, are the fundamentals of wealth creation, the fundamentals of long-term investing. This is not splashy stuff, but that's largely what the programming at Future Proof is geared towards. Those really underscore the importance of long-term wealth, and that's tantamount to the programming here.
And JD, Tai, and I want to hear about the latest trends to advise clients, including personal finance, as well as navigating political uncertainty, especially as you join us on this Fed Day. So, Tai, let's kick off today's session. And JD, we look forward to hearing about the latest that's taking place from Huntington Beach, California. But first and foremost, we do want to do a quick market check, especially since we're kicking off the hour. And right now we are seeing mixed trading for the major U.S. stock averages. The Dow Jones Industrial Average is in the red, and it is off by 71 points. The Nasdaq Composite Index in positive territory and is higher by 0.17%. The S&P 500 trading flat this morning. So, Tai, let's check in with JD once again and hear about what's been going on during the conference. So, you've mentioned that you've attended for the second year in a row. What would you say is different this year compared to last year?
I mean, honestly, the scale, the size, and the enthusiasm. I mean, I think in terms of programming, one thing that is really clear is the interest in artificial intelligence, but it's not so much about the splashy pro-growth, pro-tech AI stocks. It's the ways in which artificial intelligence will change the client-advisor relationship for wealth management. And then, of course, Remy and Tai, since we are just a couple of months, really a handful of weeks away from the presidential election, a lot of conversations this year first time about protecting your portfolio in a potentially choppy political environment. But for the most part, every wealth management advisor I spoke with, every portfolio manager I spoke with says they are advising their clients in this particular political cycle to be patient, to allow to see how the dust settles and really get a sense over those first few weeks of next year's administration, what those policy proposals will actually look like. Calm is the name of the game. That's one of the recurring themes that was really important in the programming at Future Proof with regards to the election the last week.
JD, to your point, as much as AI might be taking a bigger and bigger part of that relationship, what you've just said, that kind of advice from the advisor to the client, is something that AI probably can't do, or can't do with the surety that a person can. But are people worried about AI in terms of our advisors worried about clients potentially just dealing through an AI and sort of cutting them increasingly out of the equation?
Well, the recurring joke from a lot of wealth management advisors was, I may be biased when I say this, but hiring an advisor, that human component, is and will forever be, and should be, they argue, a crucial part to sound long-term investing. Most managers I spoke with here at Future Proof are really excited about what the prospect of artificial intelligence gathering further information historically on trades, better setting up their clients for success based on their own investment history, and being able to help clean up around the edges research components that might otherwise be some more kind of slower, more boring tasks for something like a family office. So honestly, a lot of enthusiasm for artificial intelligence. This was not the type of crowd who's talking necessarily about job displacement for AI. There's still a lot of excitement.
And JD, you've been surrounded by over 2,200 financial advisors, wealth management executives, as well as limited partners while you were there. So I do want to do a quick vibe check. So here at the New York Stock Exchange, we are counting down to 2 p.m. Eastern Time. The long anticipated, widely expected rate cut, we'll have to wait and see what happens in terms of the size of that rate cut. But what have the attendees at this Future Proof conference been saying as we head into the 2 p.m. hour today?
Well, I mean, it's a bit of irony, Remy, because so many of our friends from New York, top analysts that we speak to, reporters, a lot of them happen to be here for a few days on what's not just any Fed day. It's arguably the most consequential Fed day. Honestly, I would argue not too much programming was really geared necessarily to something as short-term as interest rate cuts for this Wednesday. To be honest, it was a bit more of a conversation we would kind of have after hours. Our parties or events, because this is the kind of stuff we all kind of nerd out on, right? We really like talking about this stuff. So, ultimately, I think in terms of sound wealth management advice, it's not the sort of thing that I think is too immediate, as opposed to wealth management advisors really advising their clients on what the long-term trajectory looks like as interest rates come down. And of course, everyone wants to speculate, is it 25 basis points? Is it 50? Certainly a topic of conversation, but more of a fun one, I would argue, amongst friends versus established programming of investors.
JD, is there a general view of people leaning towards 25, leaning towards 50? Because as you made a great point, we haven't had a meeting like this where we're not sure for probably since 2007, if I recall correctly. So which way are people leaning?
I mean, it still to me it appears that people are leaning in the 25 basis point camp, or in other words, 0.25% off of the federal funds rate. Although I was surprised to see the CME through FedWatch before we came out here seems to argue closer to 60% argument for a 50 basis point cut. But some of our old pals, people like Dan Ives or Jay Woods that I know you have here on the show frequently, they have argued that if you go back to how the rate hiking cycle began, it started with smaller increments before going up to so-called jumbo interest rate hikes. And I think the idea is that the central bank would likely come in and do 25 basis points. And of course, if the Fed did come out and do 50 in the 2 o'clock hour yesterday, the market might do that as a bit of an admission that they should have started this process sooner. And I think certainly FOMC, Fed officials looking to maintain as consistent a posture as possible will largely underscore the decision we get today. So it appears as if it's 25, but I've certainly been surprised with the Fed before, to be fair, Ty.
And JD, as you mentioned, there is nothing like Wall Street and the New York Stock Exchange, and our friends are attending the conference as well. But I think it's also important to keep your finger on the pulse of the American consumer, especially outside of New York City, the East Coast. So recently, in terms of the latest economic data, we saw retail sales improve last month, but purse strings do still remain tight for a lot of Americans. And you've been on the ground in California at this conference asking what's the most important business story we should be talking more about. So tell us a little bit more about this and some of the responses you've been hearing.
Well, the responses have been all over the place. Believe it or not, there's still a lot of people in the financial world. They say we're still not talking enough about what artificial and certain components of artificial intelligence. An interesting answer I got from lots of attendees the last few days was the generational wealth transfer. What is happening with regards to an aging U.S. population, future impact on American healthcare, the U.S. economy, what it means for the policy proposals that are being put forward by both parties for the future of healthcare as one generation continues to age up and our workforces are shifting. So, really, I think in an overall sense that, there are certainly a lot of splashy things that we focus on in the markets, the Magnificent Seven and this stock, and rightfully so. But underneath the surface, a lot of concerns about structural issues and structural changes, not to mention geopolitics. Another one that I heard a lot about, just the true threat of future disruption to alliances and what that'll mean for things like commodities and markets around the world. A lot of fascinating insights for sure.
And Ty, you and I have been talking about this before the show as well, the fact that they're on a daily basis geopolitics as well as politics affecting the overall markets, especially when it comes to commodity prices.
Yes. As a matter of fact, I think the oil prices in particular have been sort of shrugging off. We have a lot of problems in the world, like Ukraine, certainly the Middle East has heated up dramatically probably in the last 24 hours. I think the first issue with Hezbollah's beepers happened while we were literally in the middle of the show yesterday. And I think the commodity markets aren't really pricing that in. I think we've seen a rally in crude oil, and I think it's good because there's some people, the market was very short, and I think they're covering some of those shorts. I don't know if you can go long thinking about something might happen, but I don't think I'd really want to be short at this stage, certainly not the energy markets.
And Ty, another thing that we have oftentimes talked about on this show is the generational wealth transfer, right? Because people are obviously living longer, and traditionally it might be 3 generations living in tandem, but if most people are living beyond retirement years and perhaps beyond the age of 100, that has a lot of implications in terms of stretching out your funds, doesn't it?
It does. One of the things that I think a lot of people rightly worry about is you don't want to outlive your money. All right, so you want to, and the last section of the baby boomers, the last of whom were born, I think, in the early 1960s, are starting to retire. But that means there's a big portion of baby boomers who are in their 70s where they're now tapping into their money. So how it's going to be a really interesting question, and we won't notice it for years, how they manage their money. Are they going to spend it down quickly, or as you say, if they think they're going to live long, they're going to be a little more careful about it, invest in other things. So that has a lot of implications for fixed income. There are a lot of folks, a lot of older people who are going to be in fixed income, but as interest rates come down, I mean, it's great to get 5% on your money, but if you're only going to get 3% of your money, do you feel that, for me to live in the manner to which I've become accustomed, do I need to go into, riskier investments?
Sure,
and it's actually a question I'd love to ask JD.
Yeah. Let's bring JD back in here.
Is JD, in terms of, I know in the past few years, alternative investments have gained a lot of interest, particularly things like private credit, where you're getting more money for additional risk. Was there a lot of focus on, at Future-Proof about sort of these alternative investments?
Yeah, you definitely hear about some of the other things that are worth cycling into, and you hear some really unique answers. I mean, it's outside of just things like, gold or particular things. I hear a lot about investing in things like precious metals and particular commodities. And, at the same time, what goes hand in hand with that, an increased focus on the geography of evolving nations and evolving economies. A lot of interest in India, a lot of interest in the Middle East, a lot of interest in Brazil. These are countries and regions around the world I hear such interest for, especially from people at a place like Future-Proof, because my sense is, Ty and Remy, that a lot of either wealth management creators or VCs, they are, experiencing those emerging economies and the opportunities there really for the first time. There's a lot of excitement, not just on advising their clients on a lot of these, alternative either things or places to invest in, but doing a lot of their own original in-house research, which is fascinating to read about what they think smart investments will look like. Not just for the short term, especially as we're dealing with interest rates finally coming down, but really that 10 to 20 year horizon.
And JD, I also want to ask you more about how artificial intelligence and technology is changing the advisor-client relationship. I imagine there must have been plenty of panels, plenty of conversations about this.
Yes, there absolutely were. And again, I stress the fact that, something for so many people here that love to talk about splashy stocks and what's moving the market one way or another. So much of this, especially in AI, these are kind of, more muted conversations, right? These are dealing with kind of the fundamentals and, some of those kind of wonky back end, at times bureaucratic things that a tech founder or a CEO company and recognize how artificial helps streamline a lot of that data gathering. And then ultimately, I think there's a lot of confidence that AI can be used by the wealth management space to better predict what a client may be interested in based on their own investment history. Let's say for the upcoming earnings season or for the upcoming potential bull or bear market cycle. How do we use AI in a way that helps best set you up for success and even give us considerations for your portfolio that we might not have even thought about? So, and it's also interesting to hear how people are already using it. And of course, a lot of fun chat GPT style conversations as well that goes on in a place like this.
JD, did you get a sense from some of the advisors you talked to that they're really investing in it, embracing the AI and see how AI can help them grow their business or maintain their business? Or is it more sometimes, I remember in the 90s when the electronic brokerage started to come on strongly, that there was a reluctance of, well, we're just going to have we will have our relationships and this is really not a threat. Is there a sense of, are they really embracing it, or is it a little like you're going to have to drag us into it?
I mean, ironically, I think the only reluctance really on AI that I heard at an investment, a pure play long form investment festival like this, is reluctance to have the knee-jerk reactions that attach to AI stocks. Believe it or not, this is actually a festival where you're not going to hear a lot of, say, jump in on NVIDIA, oh, look how great these companies are doing. That's where the reluctance on AI comes into, because I think through the lens of sound fundamentals and patience, so many advisors are telling their clients not to have reactions. And so that, to me, is the only part where there's resistance on the AI story. But in terms of actually using it for their own offices, for their own firms, how it changes that relationship with their clients, I really only heard enthusiasm in terms of how they think it best sets them up for success in the future.
And when it comes to financial services, Ty, we know that there's a lot of regulation involved, right?
Yes.
So when you introduce a new technology, say AI, whether we're talking about advising clients or helping financial services professionals compile reports or do forecasting or build models, we know that regulation plays into this. So are there concerns when it comes to regulation and how financial services professionals are advising their clients?
I mean, it is absolutely a top priority for these financial services firms. I think to continue to kind of have these conversations, and what's fascinating is when you get together at a place like this, it's not so much the panels and the official programming, but you kind of see the light bulb moments happen in private one-on-one sessions. So one thing that's really interesting to you, Remy, that Future Proof does that I really haven't seen at other events are these sort of speed dating style, what they call breakout or breakthrough sessions. And they're designed to just be basically 5 or 6 very punchy minutes one-on-one. And I had the opportunity to meet with a lot of people there and also observe other wealth managers connect and have those light bulb moments about how they're using a lot of these processes. And, ultimately, I think it's a type of industry, as any industry is, where there's a lot of competition, but also a recognition of emerging opportunities or emerging threats that can kind of raise all boats at the same time, rise all boats, and help them all lift together. So you really see that at a place like Future Proof front and center.
And JD, I'm sure that you spoke with a lot of professionals during this conference and, of course, some of these breakout sessions. So tell us a little bit about some of the conversations you had and what can you share with us?
Well, let me start with a couple of our friends. I'll start with the great Jay Woods of Freedom Capital Markets. Remy, even though he's a longtime friend of ours there on the floor of the New York Stock Exchange, it is very cool to be in a place like beautiful Southern California and get to interview your friends. And I want to ask Jay a few kind of unique questions. So because he is a technical analyst, he is a CMT, I want to ask him about any of his favorite stocks, his favorite names that are not necessarily household names. Jay Woods is driven by the charts. He's driven by the numbers. Motionless investor. I do believe we have sound. This is Jay Woods of Freedom Capital Markets telling me his favorite stocks right now that are not household names. Take a look.
I mentioned transports earlier, Matson, MATX. It's not a household name, but it's a shipper. Like some of these shippers you see right out here in the ocean. Stock is one of the best performing stocks. That and Kirby, KEX, two shippers in the transportation index that just have, just sailed up and slowly like a tanker themselves. And it's boring. It's not sexy. It's not going to make headlines, but it's something if you had in your portfolio, you'd be pretty happy about right now.
Remy
well,
and Ty, you can easily
JD,
see.
we will actually.
Yeah. Oh, go ahead, Remy. Apologies.
No, go ahead, JD.
I was going to say you can see the appeal to being out here to doing an event like that with a beautiful shot. And to Jay's point, MATX, that shipper up 16% year to date, KEX up 56% year to date. That's kind of what you get at a conference like this. It's conversations about things that are not super intuitive, not super top of mind, and that's largely what I want to get in my conversations with people on the wealth management side, as well as some old friends and technicians like Jay Woods.
And JD, you're absolutely right, because when we're speaking with Jay Woods here on the floor, we usually ask him about what's happening in the broader market in terms of equity indexes or Mag 7 names or even monetary or fiscal policy, as well as some of the charting. So it is good to hear his perspective, and I'm sure being out of the office, for us it's out of the New York Stock Exchange and being in Huntington Beach, that must be a really good backdrop for having these conversations.
It's definitely the type of place you want to have a lot of block and SPF on hand. I will say. Yes, also a lot of fun at the same time.
I'm hoping that some of those breakout sessions are on the beach or at least outside. I mean, it looks absolutely lovely there.
It's great, and a lot of credit to the founders. This event is co-founded by Rit Holtz, Wealth Management, and obviously it brings together a lot of the major power players across the industry. It's the third year that they've done it. And to highlight the point of fun, I really wasn't joking. There's a closing night concert that they do after you crush through all this new information for wealth management and advising your clients and asset management. Third Eye Blind with ex-ambassadors last night on the main stage here. So it's the final morning here at Future Proof, your final breakout sessions, your opportunities here to connect with people for my role as a member of the media, my chance to can together my last few interviews with people that I really want to speak with. And my goal, Remy and Ty, largely is to help bridge the gap between some of the very heady, very weighty, at times admittedly very complicated world of wealth management, and have the average person at home better understand how to access this world and what some of the complications, all these complicated things really mean for them. And that's been an awesome challenge the last few days.
In the impromptu conversations you've had, and sometimes you just pick up the best bits of information, what would you say are some of the significant concerns for the next year? Is there concern about valuation, that we've had such a steady advance, that are we going to advance more as interest rates come down, or do we plateau? Is there a sense of what are some of the concerns that you, sometimes they may not say it directly, but you picked up sort of along the last 3 days?
I think it does actually tie in with our big central bank day later on today, which is the concern that maybe there are still cracks in the U.S. economy that we have not fully seen. Has the U.S. economy right now fully digested the impact of raising interest rates to a multi-decade high and keeping them there as high as the central bank did? There's always been a concern from many people on Wall Street to say, would we have to break the back of part of the economy to successfully bring prices down? It doesn't appear as if we've had, but we know the world that these lagging indicators operate in, and knowing that there could be unintended economic consequences many months down the line. That is a concern that I did hear from people. And then, of course, to the not necessarily the immediate politics of the U.S. election, but the global geopolitics, Ty and Remy, as we've already discussed, and how new alliances may jeopardize the standard or process of business that we are so used to. So those are definitely among the major concerns. It's just sort of the devil is always the thing you don't think about, right? What's that one detail we're not kind of considering? I heard a lot of that the last few days.
Right? It's sort of the unknown unknowns that you don't know what's going to pop up, and I guess having been in the market for a long time, it's just the ones that you just don't see it coming that can sometimes be very, very dangerous.
That's exactly right.
And JD, while we And JD, I don't want to cut you off, so while you are with us for this half hour, I do want to ask you about some of the best investment tips that you've been hearing. I'm sure you've had the opportunity to speak with a lot of managers, financial advisors, and wealth management professionals. So what are they saying right now?
Absolutely. Apologies, by the way. Obviously, we're on a bit of a delay, so thank you for your patience. I think one of the biggest recurring themes I hear, Remy and Ty, it is time in the market. It is not timing the market. And I think that sound fundamental advice is really top of mind for a lot of people as we head into what could be potentially choppy, uncertain waters ahead in regards to finally lowering of interest rates, seeing how pricing is established, unemployment numbers, which have been ticking back up, of course, on the back of a wildly consequential U.S. presidential election, other elections in the next few years around the world as well. So, you know, it's a lot of people who say, hey, you may not really like my answer. It sounds boring. It's not splashy, but you preach the fundamentals and you play the long game. And that is really, if I just sum up the vast majority of conversations I've had, that really is it. But I think that's actually really important for investors to know, especially in an era where day trading is as popular as it is, and people are largely gravitated towards the big splashy names that are very volatile, the Teslas and the Nvidias of the world.
JD, do you get a sense from some of these advisors, what do they think of these sort of, some of their clients are probably going to be active day traders or much more active in their portfolios? Do you get a sense of how they, I know it is time in the market. If you miss the best 30 days over the last 20 years, I think you've actually lost money in the S&P 500. But do you get a sense, any sense of what these advisors think of folks who like to trade in and out? Is it more, are they more difficult clients, or they have to be handled a little bit differently?
Honestly, it's not something that I think a lot of wealth managers want to talk about. I think my kind of sense is, hey, if I have clients that are interested in that part of the game, I'm going to maintain more of a hands-off approach. I mean, there are a lot of people in the asset management world who will use the word gambling. That's their own personal opinion, their own personal description of true day trading. And at the same time say, of course, it's no disrespect to people who have sought that type of access to the market, especially as access to trading platforms has been undoubtedly democratized the last several years on mobile apps and things like that. But ultimately, that is a different game fundamentally than largely what you hear at a conference like this. So, you certainly hear it. It comes up, especially from the technical analysts that are watching really key support or breakout levels, the way that Jay Woods or Dan Ives or Ryan Dietrich or JC Peretz might, right? Where you're really watching key levels of stocks. It's a different game altogether, though, if you're just kind of playing the short term.
And absolutely, JD. So before we let you go, I know you have a flight to catch soon. There are less than 50 days until November 5th, and you spent plenty of time in Washington, D.C., covering politics, covering elections. So tell us about the latest when it comes to polling, especially when it comes to the economy.
No, we were talking about it. And not just the economy, but especially among Americans who watched the recent debate between former President Donald Trump and Vice President Kamala Harris. I wouldn't say an overwhelming degree of favoriting Harris, but specifically on the question of who do you trust to handle the stewardship of the U.S. economy? Is it Kamala Harris or is it Donald Trump? Harris has the lead, and it's just about at or just outside the margin of error. And what is fascinating to me is that the latest polls from the Financial Times, from the University of Michigan Ross School of Business, from the University of Chicago School of Business, they're all showing that Vice President Harris seems to have the trust of the American people more on handling the economy than her own predecessor, the man who's the incumbent, President Joe Biden. So it appears right now, at least according to polls since that debate, Remy and Ty, that Vice President Harris has been successful in separating herself a bit, putting a bit of daylight between herself and President Biden on the economy. And again, it's without a doubt one of the most important issues. And Americans are saying even right now, especially among those who watch the debate, Harris might be better off to help us bring prices down, even if she's a part of the administration that has seen the spike of inflation in the last few years. So, really important issue for voters. I think the polling, just a snapshot, not a predictive tool, but the snapshot tells us a really interesting.
JD, in terms of as a reporter in the media, do you get the sense that in terms of are people trusting the media to sort of play it straight, or is it sort of really the base, or will the base sort of shrink into themselves, where Trump supporters will not trust anybody except Fox News or similar, and for the other side you only want to listen to MSNBC. Do you get a sense that people trust the media a little bit more, a little less, as we close in on election day?
I think the very definition of the media is evolving, and new platforms are popping up, and traditional ways of watching are breaking down, and people are watching new streaming shows. I think even the definition of what the media is continues to evolve. Unfortunately, I do think that I see more distrust in traditional media than I've noticed, over the last 10 years or so of my career. It's probably one of my personal concerns, this kind of tribalism, or this sort of run to your corner, the echo chambers that can very quickly evolve throughout all corners of the internet, and people therefore, being really surprised to learn contradictory bits of information or electoral outcomes because they were very clearly clued into the type of news they wanted to hear, as opposed to maybe some inconvenient truths about their own candidate or about the legitimacy of whatever it is. But I think that distrust is absolutely there. But hopefully all Americans, I always advise people, Ty and Remy, take in as many different bits of information as you can. Listen to things that you don't agree with. It all makes you a more informed voter, without a doubt.
Okay, JD, well, thank you so much for joining us all the way from California. We look forward to seeing you back here at the New York Stock Exchange. So thank you for joining us for today's Market Insight, and safe travels back home.
Can't wait. Thanks, everyone.
Thank you, JD. And next up, Tai Wong and I will be taking a closer look at the markets with the market briefing. We'll be right back. Don't go away.